Hi, I'm Sawyer, and welcome to the Lowdown on Alternative Credit. Mortgage applications follow a pretty set process. Lenders check whether income and assets meet certain criteria, but the actual loan approval is based heavily on what's in the credit report. As long as there is ample data in that report, the process is fairly straightforward. But for some key groups of potential homeowners, specifically those with little to no credit history, obtaining a mortgage is not that simple. All of that, though, is finally starting to change.
You don't have much of a credit history, I'm afraid. So what we're gonna do is look at some of your trends. Social media trends. I actually take a peek at your Instagram, your following, your engagement, some of those vanity metrics we like to talk about. You're losing followers at a steady pace. Bad trend.
I thought we were gonna be looking at my credit report.
This is you, right? Annie loves cats. 2, you're not taking advantage of reels. I don't know if you missed the memo on that, but maybe try some more reels of those cats and less pictures of their, I don't even know what that is.
The Federal Housing Finance Agency, FHFA, just announced that they will move from the typical FICO scoring model that has been used by Fannie and Freddie for the past few decades to the new FICO 10T and VantageScore 4.0. Both of these new scoring models look at what's called trended data. This is basically a way to look at a borrower's credit and spending trends instead of simply a snapshot of a specific date and time.
What we can actually do is look at your cash flow. This is how you prioritize those paychecks once they roll in twice a month, all right? So what we're gonna do, you've never seen this much cash in your life, friend. This is an average January for me. But what I'm gonna do is hypothetically gift you this cash. You're gonna spend it on one of 3 things. 1, pay off your car. Probably like an old Ford Taurus or something, but we're gonna pay it off. Option 2, you can take your childhood friend to Disneyland. I'll even give you the park hopper tickets, okay? Option 3, you take whatever's in this mystery envelope. Now I don't know, they don't tell me. So take your time. Mystery envelope. Should have paid off that car. That's actually just a coupon to Arby's for a beef and cheddar.
Freddie Mac also just announced that it will start reviewing financial account data as a way to assess borrower credit risk. Basically, with the borrower's permission, the system will evaluate 12 or more months of cash flow activity into the borrower's checking, savings, and investment accounts to see if they're consistently receiving deposits and then using those funds to pay things like rent, utilities, etc. One thing of note is that Freddie claims that this information can only positively affect borrowers. So if some applicants have recently experienced hardships and their bank accounts aren't looking so great at the moment, then that won't affect the loan decision. Also, back in November of 2021, Freddie launched an initiative to encourage rental property owners to report on-time rental payments to the 3 major credit bureaus, basically eliminating the need for borrowers to provide the necessary documentation to prove rental payment history. Though the program has a relatively small amount of enrollments currently, according to a representative of Freddie Mac, this has already helped some renters see an increase in their credit scores.
Let's get back to basics. I'm just gonna take a peek at your credit report, okay? Now, luckily, I now have access to some unconventional data. For example, your Netflix subscription. It looks like you got a lot of people on that sucker. You sharing that?
Well, I mean, I got the cats.
Your cats. I also see a couple overdue library books here on your report. How to Groom Your Cat the Old-Fashioned Way, a definitive guide. 2 weeks overdue. I'd get that back there, because that's dinging your score pretty significantly.
This comes in conjunction with Equifax and Experian recently announcing that they will start including things like on-time utility and cell phone payments in their credit score models as well. Though Equifax hasn't yet discussed what data will be checked, how it will be collected, or when borrowers might start seeing changes on their credit reports. All of these initiatives are geared towards helping borrowers with what's referred to as a thin credit file to navigate the home buying process a bit more easily. Processes that used to take significant time and energy for both LOs and borrowers may soon be automated. Only time will tell if or when borrowers may benefit from these changes, but we will continue to provide updates with any major developments as they happen. That's all for us. Thanks for watching, and for more content like this, you can check out trythecoop.com.